Hello everyone, welcome back to the 26th episode of the 2026 Portfolio Challenge series. First off, happy 4th of July and happy halfway point to the challenge. Just a reminder, all these portfolios started out at $100,000, and here you can see most of them are beating the S&P 500 with only the meme stock lagging still. And I think maybe next week I'll go over my goals again, or maybe even after these upcoming earnings season. Disclaimer, this video is not financial advice. So in today's itinerary, I sold Robinhood in my main portfolio and I sold a covered call on it in my value portfolio. I bought more Meta in both of them. Celsius started moving up, ELF started moving up, Robinhood has been moving up, and oil futures are back down. So I just want to go over those charts. I haven't looked at charts in a while and I just want to take a look at those charts a bit. And then I do want to go over the GameStop simulation again for the meme stock portfolio. Then we're going to go over the watch list and macro news. So Robinhood just had their World is Flat event. Nvidia is revenue sharing with some AI startups. Apple is raising, well, they raised their prices. When I was writing this, they said they were going to raise them, and officially they've raised them. And Meta is selling excess compute. This was pretty recent, and it's not 100% sure what's going on there, but from what I understand, I'll just talk about what I understand from all that, and then I'll go over my portfolios at the end, what they look like. So first off, let's go to the charts. So first off, Robinhood. This is pretty awesome. The year started right here in 2026, right there, and we are almost up on the year now, almost. But we are significantly up from where we were just a couple months ago. Back in mid-April, early May, I was still very strongly convicted about Robinhood, even when it dropped to 62. You can go back and watch this. I was making videos saying that I think it's going to go back up to 120. Now, I thought it would hit 120 by the 1st of July, meaning June 30th. And it got to 112-ish. And did this touch 120? Yeah. So on Thursday it would be now, July 3rd? No, July 2nd. Yeah, July 2nd. Oh, it says it right there, yeah. It did hit 120, so I was a few days late, and I think it will keep bouncing around to 120, back down to 100 for a few days. So I did leave in my value portfolio some Robinhood, and I'm selling covered calls at the 116 mark, and I collected 600, I think. It was like 3% for the week, so if it gets called away, I'm not going to be mad because I would have sold it anyways. And I'm just here to collect a bit of premium on what's left. But I don't think it'll be dropping back down. If it does, it might hang out around the 100 mark for a bit. So I'm not too worried about that. Very happy with the investment. It did what I needed it to do. And let's move on. So this might not be in order of what I wrote earlier, but it is in order of what I have here. I just wanted to say, take a look at this beautiful chart from ELF. This is amazing. Again, I was talking about buying ELF. Well, I talked about buying them when they crossed below 60, and then I was buying and buying and buying all the way down. And I don't think I had an order when it broke under 50, but at like 53, I think I had that order set to go. This was in this area, not the second time it came down, and since then it's just been going back up. And I've been saying that I think it'll hit 90, maybe higher, but I'll probably sell at 90 to 100, wherever the day that it breaks 90, if it does, that day I'll probably sell when I see it's at its highest, probably around lunch, when everybody goes to lunch break. But if it does go back up to, the 120s, I'll be right there. And I think it is long-term worth of maybe 150, 200, not in the next year probably, but definitely with Road expanding and ELF expanding in Europe, this could easily be a $200 stock in a few years. But for this challenge, I am being very aggressive, so I'll probably sell it at 90 to 100 range, but we'll see. Celsius. So Celsius historically has moved with ELF. They're both consumer defensive. So I was wondering when it would join ELF because ELF's been moving up for a while now. By the way, check this out. I think that's like, 50%? No, 40-something% over the past few months. 60% over the past 24 days, 17 bars, so 17 trading days. That's just over 3 weeks, 60%. That's amazing. Yeah, sorry. So back to Celsius. For me, by the way, the fair value for Celsius is 45, 46-ish. That's roughly where it started dropping from in this big like canyon type of thing right here. So we'll see what happens, but I do think it will go back to that 45 and 46 range, but it is a pretty big momentum stock. And even as you can see here, it just had an 8% day. And then, well, this day started pretty high, but it had 2 straight like 6 and up percent days. And I think it's going to keep going until it reaches the 50. And then again, it's all momentum. So if it touches 50, I'll for sure sell, probably. We'll see. But definitely long term for the next year, I think it's going to hover around 45. And it is very cheap, around 30 right here. Then I did want to talk about US oil. So it did take significantly longer to go back to its standard range, you could say. Generally, oil over the past few years, it likes to be between, like 50 and 75, I think is what they shoot for. When it's too cheap, the oil companies lose money, and when it's too expensive, then people lose money. Yeah, this took quite a bit longer than I thought it would take. I thought it would take maybe a month tops, but how long did that take? 126 days. That's what, a third of the year? Yeah, that's like 4 months almost. So I will say that when it jumped, this was the very beginning of the US-Iran war, and it jumped to 120, and I said it would not go over 120, and it never went above 120, so you're welcome, I guess. I am seeing my own praises here today because it's been a pretty good week, but we'll see. Maybe it'll all just fly up to 150 now, just to spite me. But I do think oil is going to keep being pretty steady here. And it did take longer than I thought it would take. I thought this thing would be over in about a month, but it's been taking longer. What else did I want to talk about? Elf, Robinhood, Celsius. Oh, I did buy more Meta. So Meta, we'll talk about Meta later, but man, this thing's been suppressed for a while. I think it should be at around 850, and I've said that a few times now. In fact, I thought it would be 850, like this would continue straight up. And then it dropped, and so I thought this would be like straight back up, then drop more. And when it hit, did it hit 500? I remember it hitting 500, but here it doesn't show it. Maybe it was overnight. Here it's saying 519 is the lowest. I remember when it was around this area, and I was thinking of going just all in on this in the portfolios because 100% Meta is a phenomenal company. It's an owner-run company and one of the best-run companies, I think, in the world. So I am a big fan of them. And the stock is being kind of suppressed right now. This jump right here, we'll talk about that later. That is because of the cloud computing thing that Meta's doing. And again, we'll talk about it soon. But yeah, we'll see what goes on here. I fully expect Meta to at least touch 700 by the end of the year, if not to go all the way back up to 800. And then I wanted to talk about the GameStop simulation. So last week I went through this a bit, and I ran these simulations, Monte Carlo simulations, and the values I had here were really, really bad. They were inaccurate at best. And so when I was saying that I would get to, I think it was showing 300 or so options, that didn't seem reasonable to me. And the price here that it was showing was like 350 or 4, which is incredibly low. And it gave me an only $118,000, which didn't sit right with the simulations, which are using actual Black-Scholes models. And again, Black-Scholes is for European options, which have no early assignment. But the math, like the ideal price, when it's far enough out, Black-Scholes is a good enough estimator in American options as well. And again, GameStop is an American option. So I do use Black-Scholes here, and these are all using Black-Scholes, and they were all in the 150s, and it was at 118K. And that just didn't look right to me. So I reran it with proper Black-Scholes modeling here. I just used the simulations values and copied them over to here. And this is all with the stock price at 21. So if it's higher, obviously I'll buy less options, but this value will be higher. So this week it was 7 instead of 630. And this is just classic option theta decay right here. But I do believe that 140K is reasonable. Again, this is with luck. This is without GameStop just rolling me through no eBay acquiry this year, no Roaring Kitty coming back. This is just pure GameStop with high premiums and high volatility as it always does. So this is pretty safe, I think. 140K, that looks reasonable. I'll be happy with 130K at the moment. Even 125K, I'd be happy. That's a 25% gain from here, even more. So yeah, I just wanted to talk more about the simulation. And I believe that is it for this section. Yep. Okay, let's talk about the Robinhood World is Flat event. So first off, I just want to say I love Robinhood as a company. I love them as a stock. Even though I did sell a lot of my Robinhood in most of my accounts, I think in the long term, they are a very good company. It's just that right now there's better opportunities in the short term. By short term, I mean 1 year, 1 to 2 years. But yeah, so I do like the company. I like Vlad. And I really like how they do their events. They go all out. They have a neat script. They do demonstrations. It's really, really good. So in the World is Flat event, and I highly recommend just to go watch that because it's interesting in and of itself. So the highlights, I think I caught most of them. They launched their own stablecoin, USDG, and stablecoin is basically, it's a coin that goes 1-to-1 with the US dollar. And so you hold it in your wallet and it allows you to buy and sell things on that chain and on that wallet using this stablecoin, which belongs to Robinhood, so USDG. And they're launching it with a 7% yearly hold APY, 7% APY, I guess I should write here. So if you go and you put your money into the USDG, instead of putting it in a high yield savings account or just in Robinhood app if you have Robinhood Gold, and high yield savings are roughly 4%. Robinhood Gold is also giving me 4%, I think. So this is 7% APY yearly, which is insane. And by the way, this compounds daily. So I don't think you can find this anywhere else right now in a stable coin. So that's amazing. And then they also launched stock tokens for international places. So across Europe, across Singapore, they launched stock tokens for stocks that you cannot buy in the US market over there. So things like SpaceX, things like even Google and Meta. I know there's countries that have issues buying US-based stocks. And so Robinhood is kind of circumventing this by using stock tokens, where each token, this is on crypto, by the way, where each token is 1-to-1 with the stock and it's on-chain. And Robinhood even said that they're talking with companies to launch, instead of shares, that they'll launch direct tokens to Robinhood, where you have like literal ownership like a share, but it's in a crypto wallet. So that's really cool. That gives access to a lot more people. I'm not entirely sure how this actually affects, like if somebody buys a stock through the tokens, I'm not entirely sure if it affects the real price of the stock or not. But I think it's really neat that they're doing this, and it is 24/7, which is very useful. Canada, they finally have full approval and they are opening in Canada, which is a huge market. It is North America. They are almost as wealthy as US customers. And so they can finally open in Canada, and that is super bullish for them in the long term. And then perpetual futures for stock coins and with leverage. This, by the way, this is interesting to me because they don't offer leverage. If your portfolio is high risk, they don't offer leverage at all. Maybe like 10%. If you're holding only ETFs, they'll let you almost 2x leverage. So by leverage, I mean you can take margin equal to your current account value, and then you can just keep putting that into the S&P 500, and you pay a fee. I think that's 5% per year APY. It's basically a loan, but the profits you keep are yours. So they're doing perpetual futures, which for anybody who's traded crypto or futures, you can generally have up to even 20x leverage. So I can put $5 and I can buy $100 worth of Bitcoin, for instance, using Bitcoin futures. So they're doing that with stocks, and not all of them. This is just the big name companies right now, but they said that they're expanding it. I think they said there's 30 stocks they're currently doing this with. And again, this is using their wallet, etc. But it's interesting that they're allowing, I think they said 10x leverage using the crypto perpetual futures. I think that's really neat. It allows you to circumvent using options, which has theta decay, but it does make you pay for holding the money. And again, I'm not sure how much you're paying for the usage of this margin or not, for the leverage. Once I do more research, we'll see. But it's probably going to be around 7%, maybe 8 or 10%. And at that point, the question is if it's even worth to do with leverage. Actually, we'll see here. Hold up. How much does Robinhood take for? Okay, yeah. So it's showing, I'm not sure how accurate this is, but it's around 11% margin. So, I mean, obviously, if you're expecting to make more than 11%, then it's going to be worth it. This is interesting. I'm going to have to look more into this. Again, I do not think you should be using margin, but it does exist. Be safe. Make sure if you are going to do this, just be safe. But in general, I do not recommend using margin or leverage. But it is interesting that they're doing this. And at 11%, that's a bit a lot. And it does explain how 7% APY exists. Yeah, and here I wrote, I do still believe in the company, just that there's more value elsewhere. And I just wanted to show you guys, I sold it in the main portfolio, I sold it in the meme stock portfolio. Deep value one didn't have it. And here I sold 50 shares, so I'd have a round value. And the Robinhood price is 112, and I have a 116 call for a week out. And I got 300 per 100 of them. So 600 total over a total of 22K. How much is that? 600. Yeah, so almost 3%. That's what I remember it being. So next, NVIDIA subsidizing AI startups. So NVIDIA is offering access to their chips and tokens in exchange for future revenue sharing for a lot of, actually, I'm not sure how many AI startups. I just remember reading about it and then doing a tiny bit of research on it. And from my understanding, they're going to be committing around 210,000 GPUs to this. And again, I am unsure if it's going to be they just give it away, or they subsidize the cost of tokens, or they just let these companies use the chips while NVIDIA hasn't sold them yet, maybe. I'm not entirely sure what this is going to be, but it is revenue sharing and not profit sharing. So instead of these companies, well, maybe they do have to pay for the usage of the GPUs, but in general, from what I understand, is that any revenue they bring in using these chips, they're going to have to share some of that revenue with NVIDIA. And so on the one hand, I think that NVIDIA would enjoy share buybacks. I think the stock has been stuck for a while, and that's not a good look for the best company in the world right now. But I do think that this is an interesting way to spend their money and spend their assets in particular. So it's basically casting a large net, and one of those might be a shiny Pokemon, right? If they have a huge net and they're trying to catch all these companies, one of them might be the next Micron. I don't think it will be, but NVIDIA has money to throw around just to try this out. And again, I'm not bullish on this. I'm not bearish. I think it's very interesting, and I'll just wait and see. I do think NVIDIA is a phenomenal company, though. Apple raising prices. Who didn't see this coming, to be honest? Everybody's been raising prices with the RAM costs. And I think the big thing so far at least, no iPhone price raises, which is interesting. And then the MacBooks obviously increased a lot, but not just that. I think their Apple TV increased in price. The MacBook Neo, which used to be $599, is now $699, I think. And so that's not as good as a deal as it was. Same with the MacBook Air, which was the perfect entry-level laptop. And so that's also not super affordable anymore. But the thing is that it's not just things that had RAM in them. Even like the Apple Home Hub, or whatever they call it, that also increased in price. And I don't think that even has RAM in it. So I'm not sure what caused this price increase. It's probably they're raising the price of everything just to subsidize not raising the price on actual RAM more. So they're raising the price less than it's costing them to do, but they're raising the price on everything else to try and cover that. And I do think this is temporary. I think people are going to stop buying Apple. Obviously not for a whole year if the prices stay up there, but this is capitalism and consumers do talk. And so I think people will wait out and try and see if the prices will fall. and then Apple will drop the prices because people aren't buying as much. But again, if people just keep buying their products at these prices, then they have no reason to drop it back. So earlier I was talking about this. Meta is going to sell their excess compute. So Meta's been building out a bunch of, not data centers, but a bunch of compute power, compute capacity. And so they're saying that they're going to start selling out their excess. So whenever they need all this capacity to train their models, they're not going to be offering it. But basically any other time they're not training models using everything, that's just sitting there dormant. So to my understanding, they're going to be launching an AI cloud business, and it's going to be basically, well, it's not AWS, but it's basically that. They're going to be offering usage to their GPUs probably, and probably at a subsidized price, just so that the GPUs don't sit dormant. And so the interesting thing here is that Nebius and CoreWeave, they both dropped when the news came out. And here, like, this is when the news came out, July 1st, and Meta jumped, and then it dropped back. And Nebius, so this is Nebius right here, and Nebius dropped, since the announcement, it's dropped 22% almost. And same with CoreWeave as well. Yeah, also just around 20%. And I'm not super bullish on Nebius or CoreWeave. Neither of them are profitable companies, or if they are, it's not. I don't know. I'm not super bullish on them. Okay, so they do have a PE ratio, but not a forward PE, so they're not expected to keep being profitable. Yeah, operating income is negative, and it's not really improving. And this is with Meta. Oh, okay, so it's 2027. I did write that. Yeah, Meta's already got contracts with them for 5 years, with both of them. For 12 billion over 5 years, with the option, I think, to go all the way up to 14 billion if these companies, if Nebius and CoreWeave can't sell to other companies first. So I'm not entirely sure why they fell. This doesn't change basically anything about these companies. It's not that Meta is becoming their competitor, and certainly not, that Meta is taking their consumer base, because Meta is their consumer. Meta is their customer. So I'm not sure what's happening there, why this is happening, why these are dropping, other than them just not being that value, I think. And yeah, again, I don't think it's going to be an AWS competitor, but we'll see with Meta. They like to try a lot of things. And I do trust Zuckerberg to succeed in the end. Yeah, some of my portfolios, we can go back into big mode here, presentation mode. Yeah, ELF has just been growing. We talked about that. I put another 10K into Meta, and I sold Robinhood. Okay, so I do still hold Robinhood. I thought I sold out of all of it. So yeah, Robinhood, I sold some of it, just some of it apparently. Micron dropped, but everything else is roughly the same. With the cash, I put more into uranium, by the way, because I am very bullish on them. That's it for the most part. My deep value portfolio, so this is pure forward PE plays with guardrails. No change here. Gen is up. Micron's down, that's about it. Choice value portfolio. Again, I bought more Meta. So Meta, I put 10K into here as well. I did have cash lying around here, and I sold 50 shares of Robinhood there. There is no uranium here. And that's it. So thank you guys for listening. I'll see you guys next week. Good luck this week. Bye-bye.